Welcome back to the podcast. I'm just so excited. We've already been chatting for 30 minutes like we've been best friends forever. So I know you're going to love this episode. So today I have John C. Scott, and he is a partner and a legal industry virtual CFO with more than 30 years of experience guiding law firms through financial management, growth, and transition. He's the author of Judicial Dollars and Cents and a specialist in succession planning and managing partner transitions. John helps firm owners move beyond tax focused accounting and use financial leadership and process optimization to build firms that are profitable, scalable, and not dependent on the owner, which are all things that are music to my ears. I'm so excited. Welcome to your Profitable Law Firm podcast. I'm Kelley Brubaker, your dedicated host, passionate about empowering law firm owners. Let's dive into the hidden strategies that lead to overflowing profits, scaled growth, and thriving lives. And this is where overwhelm transforms into confidence, enabling you to create and enjoy your dream firm and your dream life. So, welcome to the podcast, John.
Thank you, Kelley. It's great to be here.
So, let's just talk about, let's go back to the beginning, origin story. How did you get in? Because I know I've already shared with my audience how I got into all of this. So, tell me, how did you get into, being a CPA, into a firm, legal industry? How did all that work out for you?
So I started in accounting in the 80s and I got to Anders in the mid to late 80s. And we seemed to get all our referrals from attorneys. And those were great referrals because that was a qualified, good client. If they were used to paying those attorney rates, they could certainly pay our rates. And so we
Absolutely.
thrived on that. And in the late 80s, early 90s, I got a referral to an attorney who was very entrepreneurial. He wanted to work on his business rather than in it. And
Oh,
at the time, he was only in the St. Louis area, but he grew it to all the United States and the UK. And he did it by paying attention to data. And I was very fortunate to be part of his finance committee for over 17 years. And I watched how he made decisions and the data he paid attention to. And then we fast forward a little bit to right before the pandemic. We at Anders merged with Summit CPAs, Summit Virtual CFO Services out of Fort Wayne. And they were fully remote before the pandemic. We were not really remote. We had a little bit of remote work. And the pandemic forced us all into figuring out remote work quickly. So when they came over, they wanted to scale into different niches. And so I went to them and I said, look, I've got all this great law firm experience. I've worked with over 400 different law firms in my career. I would love to lead up the legal vertical for BCFO services. So from there, we wrote the book, we started doing podcasts, we started speaking, and we started picking up clients in the legal space. It's been a wild ride, and it is something I want to continue to build, and I want to build a team. Right now, I've got about 5 people on the team out of 400 plus people at the firm, and I'd like to double that size in the next few years and be able to pass it on and have something that lives beyond me.
Yeah. And I love that. I mean, I love this industry. I mean, it kind of picked me, and just how it kind of picked you. And I mean, it's just amazing. I love to be able to get on calls with attorneys because we're both smart. We've been through college. We have, experiences, real life. We deal with people, and, just to be able to translate experience, I'm looking at things different because I'm looking at the numbers, and, usually they're looking at their caseload and how their clients react to things. And so, I try to bridge that gap and say, okay, how can I tell you your numbers I just want to shove numbers in front of you. So I know a lot of times I flip a lot of reports. I will take numbers and look at, turn them into graphs, because now all of a sudden it's like, oh, so talk about how you guys work with law firms, and because we were talking a little bit before about how you guys work with law firms.
Yeah, you're so right. They're very smart people, and they've been trained in the Socratic method to box you in with words. So I love the fact it's a challenge to carefully use the words that you need to use so that you can communicate with them. And their one downfall is their undergraduate and law school, there were no accounting and finance classes. So they're really good at what they do, but they don't typically have a background in accounting and finance. So it's our challenge to be able to communicate with them in a way to storytell so they can understand what's going on. So we focus on profit focused accounting, which really looks at 4 pillars, but it breaks down your revenue into non-financial drivers. What levers can we pull to change our outcome? And the 4 pillars are cash. You got to have that
Okay.
cash on hand.
Absolutely.
You can't take it all out at year end and then live on the line of credit and debt. Um, and it's amazing to me how many firms are behind in reconciling their cash position, not only in their general account, but in their trust account. And that's uber important to have your trust account reconciled. The next one is financial. You got to have your financials current so that when you look at the balance sheet, which is the most important part of the financial statements, that it's accurate and current. And then we look at production. How much capacity do we have? Where does our work come from? Do we have the ability to take on new work? When do we need to hire? When do we need to contract? Or instead of hiring, do we want to go out and find councils or other contractors that can help us, hit those peaks? And the last is pipeline. And it's really kind of a sourcing of how do we spread the work around. But again, those are the 4 areas that we look at. We also developed a maturity model, which we didn't develop the concept of maturity model, but we fit it into our profit
Yeah.
focused maturity model. And it analyzes 5 functions of your finance department. And it really is self-graded. We grade it with you. And you could be
Oh, that's
rocking
interesting. I like this.
rocking it in 2 or 3 of the categories, but then you really, you're rated really low in the other 2. And that's what we spend the next 6 to 12 months on, is getting incrementally better in those areas. And those are the goals that we have on a short-term basis. What we do with law firms is we bill them on a subscription-based model. So we have a menu of services. The services
Okay.
cover 3 legs of the stool. It's the accounting function, the advisory piece, and a tax piece. You can pick and choose any of those things that you want us to do, or that you want to keep, or keep your current CPA doing the taxes. We're agnostic with respect to all of that. So whatever we take on, we issue a statement of work, and the fee is calculated on an annual basis, but paid weekly. And it's typically about 70 to 80% of what you would pay if you hired that talent in-house. So there really is some
Right.
value there. And then if something changes in 2 months, all of a sudden you want us to take on the payables where you were going to keep that before, we just flip the switch on, issue a new statement of work, and move forward like that. If you want to take something back, same thing happens. We turn the switch off, issue a new statement of work, no long-term commitment, happy to be flexible as needs change.
Yeah, I actually just flipped this year in 26 to subscription. And now I don't do taxes or payroll, but my firm does do, I do CFO work and bookkeeping, and I do the same thing. I love the subscription piece because, I don't need to be tied into a long-term contract either. So, that is just, because I want to support clients how they need supported. And so, and you just never know what's going to change, but I like the subscription part because now I used to have clients where they would pay once a year. They would come in, and just because it was tax work, right? I'm not seeing them the whole year. And
Right.
so then I'm like, well, wait a minute. I need the monthly, not because I want the money. I mean, it's great to spread out my cash flow, but it forces you to pay me and say, oh, I need to talk to Kelley. Oh, to keep up to date throughout the whole year. Right. No, so I love all that. I mean, I know, like, from my standpoint, it's crazy to me that I'll have firms that, they'll focus on one number, whatever it is. Some of them, it's top line revenue. And I'm like, that's great, but there's so many other things that we need to focus on that. But then I struggle because I don't want to stretch somebody so far, I don't measure 20 different things. I've done webinars and different, speaking engagements where people are like, okay, well, what are the KPIs I should be looking at? And I'm like, well, I've got about 100 of them you could be looking at, but we need to narrow that down to less than 10. And like, we got to draw the line at some point, right? Because
Well,
otherwise
and they're
you
not all
can't
applicable
chase it
in
all.
every firm, right? It depends on the uniqueness of the firm.
Absolutely. So then I made the mistake. I published at one point, like a infographic, not thinking through. I did a whole bunch of stuff, and then I got to the end and I published it. And then somebody's like, okay, well, I'm contingent. I'm a PI firm, and everything you talk about, because a big thing for me a metric I love is called lockup. And it's how much time does it take from when you do the work to bill the work to collect the work. And so the person like messaged me and they were like, okay, lockup means nothing to me. I can't make a case go any faster. I mean, I'm stuck by the court, or, the opposing counsel won't settle, or, my hands are tied. I can't make this go any faster. And I'm like, you're right. But again, there's 1,000 metrics in the world that you only need to narrow that down to less than 10. So let's figure out what works best for you.
There are times in a PI firm's world where they can make things go faster, not necessarily control the court or the other side, but there
Yeah.
are times when the process breaks down. There's a paralegal or
Right.
an attorney that's a bottleneck to the whole process. And if an
Right.
MBA is supposed to take 6 months from intake to adjudication and settlement, but they're taking 9 months, we got to figure out why that is. It's
Absolutely.
not the other
Yep.
side. It's something we're doing on the inside.
Right. Because it's, how long does it take you to get the medical records? Is it the client dragging their feet, or do you just not have that going, like that whole process working? And yeah, no, I agree that there are pieces of a whole case that you can push faster, but then there's going to be some, so it's not a complete, you don't have a complete control
Right.
of the entire, but there are definitely pieces you can. And it's making sure that those, and the big thing is intake with law firms. I mean, I
Mm.
see that's a big one. I talked to a firm last summer that I said, hey, how they were struggling with cash. And I said, okay, well, I see how much cash you have in the bank. I see what your expenses are. Your expenses look fine. Like, I don't see anything crazy. I think you're reasonably spending. You have to spend money to make money. Like, there's all these things we're talking about. And I said, what do your leads look like? And she goes, I don't know. And I'm like, whoa, hold up. What do you mean you don't know? So we started working on, they had a couple people answering phones, and they weren't consistently putting things into their case management system. And so they had you could see number of calls that have come in that were logged, but you couldn't see any value to them. And I'm like, and then the whole discussion is, well, how can an intake person know the value? And I'm like, well, first off, you can come up with something that you high level. We're not talking this case is going to be 8,000 at the end, like in fees, and this one's going to be 30,000. You're right. They're not going to know that, but you can at least somehow, you've got to have them ask some questions that gets them into some type of a grid, like have a grid and say, if it's this, so like if it's an MVA that there was a tractor trailer involved. So now you've got somebody commercial involved, right? Bump that up a little bit, like but at least ballpark something, put some type of a value so you kind of know where your pipeline is. And then somehow you have to be able to judge the likelihood of that, closing, because people fall off, they stop going to get treatment or what, and then you have like not the best case, you don't have anything to stand on. And so I'm like, but you have all this data that you like, because she was like, I just don't even know. Like, I hear what you're saying, but I can't. And I said, but you have all of this. It's all in your files. It's all in your computers. You just need to figure out how to put this. And so it's been a slow process of, trying to figure out how to value what's in your pipeline. And this firm's definitely getting better at it, which I'm excited about, but it made them feel better, because then the whole thing was, to make it full circle, was, oh, okay, cash is down right now, but we have all these cases in the pipeline, and we kind of have an expectation on when things are going to close. So now I can see cash coming in. Cash is coming in 3 months. Cash is coming in 6 months, and whatever, so now I can plan better. And so that, just looking at things differently is a huge advantage. And I know I struggle. I will have conversations with firms who have an in-house bookkeeper. Now, this person may or may not be trained to be a bookkeeper. They could just be somebody that was like the right it was a person in the firm, because I know, and I've experienced this. You start a firm, and whoever, your next door neighbor needs a job, and you're like, oh, great, come work for me. I'll train you.
Yeah.
So numbers are just, I mean, I've looked at chart of accounts where there's shipping expense, postage expense, delivery expense. I'm like, oh my God, how do you even know what to put in postage versus shipping versus delivery? Like, like, can we consolidate some of this? This is a little crazy. And so then I run into this problem often where it's like the numbers are just kind of crazy, but because they're not consistent, like
Right.
there's so much stuff in them. Or I'll run into owner draws is an expense. And from a tax world, that's not going to happen. An owner's draw is an equity transaction. And so now your profit and loss, you think you only made $10,000 this year. Your tax person's like, no, you made 100 grand. And you're like, what? How did I make 100 grand? I'm like, well, because you had draws as an expense.
And you had your country club dues in there that aren't deductible. And yeah,
Well, that's the other part. Oh, I mean, and I don't know why all of a sudden this last year I've had a frequent conversation about entertainment because I'll see an expense item called meals and entertainment because most of my clients are on QuickBooks and that is just a standard expense account, suggested by QuickBooks is meals and entertainment because prior to 17, the jobs and tax cut
JCTA.
act was, yeah, yeah, yeah. And that eliminated the entertainment piece is no longer a deduction. And so I'll, tell people, hey, can we just rename this? And they're like, well, no, because I put other stuff in there. I take my clients to this concert. I'm like, well, that's not a tax deduction. Your tax person needs to know that so we have to separate those. But those are things people within the firms don't keep up with. And so, where I'm heading with all that is that there's an advantage to bringing in a firm, somebody from the outside, because we're working with so many other firms,
Right.
other law firms. As an accountant, as an accounting firm, we're working with other law firms. And so we can better guide you where when you have somebody that's in house, if they don't have any experience anywhere else, they're just doing whatever they figure out, which may or may not be correct. And I get sad because I know, like, I am not, you're the tax person. I am not, like, we're both CPAs, but I am not tax focused at all. But I know enough to be dangerous. I know enough to say, I got to raise my hand. I have a question. I don't think this looks right. And so I get scared that I think law firms could actually improve their tax bills
Oh
that
yeah.
because their numbers are bad, but then they don't see the benefit. Like they don't see the benefit of hiring a bookkeeper. But yet, if you had a good bookkeeper, it makes all the difference in your taxes, which actually you just pay for itself because you're paying less in taxes.
Yeah. In fact,
Oh,
during onboarding, the first 8 weeks of our engagement, we actually bring in additional resources and people to the project, and we review all their processes and make suggestions about upgrading those processes. And part of that is looking at the chart of accounts and saying,
yeah.
hey, here are some proposed changes. Do you approve? But we're trying to reorganize things and take that chart of accounts that has three things for postage and
Right.
stationery and consolidate them. And on the meals and entertainment front, there's a big change in the latest tax bill, OB
Mhm.
bill, where it used to be, and especially post COVID, people do internal meals for the convenience of the employees. It's a benefit, it's building culture. Well, that's no longer deductible. So,
Heard that yet? It's already
or a
February. I
free
can't.
food Friday that you have where you bring in lunch or bring in dinner when you're asking people to work late is now non-deductible. Now,
Yeah.
there are some ways around it. You could add it to the wage of the employee and then gross it up, but
Oh,
you're still
okay.
you're probably behind in that scenario. But if you do something with your client base that includes your employees, that becomes
Oh,
deductible then, right? So if you
right.
invite your clients in on a Friday to have lunch with your employees, then all of a sudden it's deductible. But there are just things you can do, but you're so right. You have to pay attention to the tax law and how you're categorizing things on your income statement.
Oh, absolutely. Yeah. I mean, and I get because I will see I'll get some firms where I inherit some chart of accounts. It's all crazy. And I'm like, why do you do that? And they're like, well, somebody told me at some conference that I should report this separate. And I'm like, okay, but how much effort does it take to separate these things? I guess I have some firms who are they have a case management system. They do their billing. It's a legal billing system. And you can go and grab all these reports. You can see revenue by office, revenue by area of practice, revenue by attorney. You do it all different ways. And then I still have some firms who want to put that all in QuickBooks. They want to put, fees by attorney. And I'm like, well, you're creating work. You could just go to the billing system and see it. Like, why are you creating extra work to put things? There's always, I'm trying to optimize your chart of accounts. Like, you need the best, like, what's the most efficient way to do bookkeeping that you're still tracking for internal reporting, for taxes? I mean, it's always a struggle and it's always a change. So, do you try to lead people into the same chart of accounts?
Uh, a similar chart of accounts. We're not going to
Yeah.
totally move their cheese, but we do want to standardize things so that
Yeah.
it makes sense for everybody. And usually they're pretty receptive to that because you're right. They only did it because they inherited that or
Yeah.
somebody that figured the next time they typed in stationery and
Right.
now we've got a separate account. So it's pretty simple to clean all that up. Yeah, we
Right.
will separate things by line of business, because some firms do several different lines of businesses. I
Yeah.
wish they would just kind of focus on one or two. I've got a firm in Florida that has, 6 different lines of business and it keeps
Oh,
changing what they want to include in each different
right.
line. But, the other thing that we try and push people to is let's automate things. Let's go to a Divvy card for expenses, a Bill.com for our payables. And
Oh, yeah.
the more we can do that, it simplifies the accounting process because it becomes almost automatic. They're a little bit scared about the Bill.com, but once they realize that you can train your vendors to email you bills and you will get the approval, you're going to see in a PDF the bill. You can ask questions and not approve. You can approve, then it gets
Right.
automatically paid. And the mail system these days is horrendous. So an electronic payment is, that happened.
I know. Oh my gosh. Yeah, I can't believe because there's been like two different things. Didn't I think just yesterday, or sometime this week, the Supreme Court said that the Postal Service cannot be sued for not delivering mail, which is
Right.
crazy.
And
And
now
then
you
this
can't
year they
rely on your
changed the
postmark.
postmark. Yes. Like, it's crazy to me. And so many things are changing. And I do see a lot of firms that are more willing, like back from when I started working with lawyers about 15, 16 years ago till now, there used to be resistance to change. This is how it's always been done. We do it the same. It always worked. And I'm like, well, and now I see it's so much like they're more pleasant conversations. Oh, that's great. Let's try it. And so I do
You
see
mean I
more
don't
people
have to come
willing.
in once a week and sign a stack of checks?
Oh my God. So many people. So at one point, I had a couple clients are like, can't we just add you to be a signer on our bank account?
No.
No. And that's like a hell no. I will not be on your bank account.
And even if
I
you
am
wanted
not
to, your
on it.
malpractice carrier would say, no way.
And I finally got to a point where I'm like, because it used to be just like me saying ethically, I just don't think that's right to do. And then I started saying, no, you know what? My malpractice insurance is going to go through the roof if I start being on your accounts. I said, seriously, you don't want this. So crazy. But yeah, I like, Bill.com, Ramp, Melio. Like now they have these, and it's a little scary because it's all in the cloud, but everything's in the cloud these days. But it
Mhm.
makes it much easier to organize, right? Because, the whole, so I have a YouTube channel and I have this whole series where I do every Friday. I post a short clip about a fraud story that happened in real life, like a real court case in a law firm. And almost all the time it is um nobody was looking at the trust account. So somebody, and sometimes it's the partner, which really sucks, but it could be a paralegal, it could be, an associate, whoever. Somebody realizes nobody's looking at the trust account and doing the three-way trust reconciliation. So I'm just going to write a check. And instead of saying Walmart, I'm going to put, instead of Walmart with no hyphen or space, it's going to be WAL hyphen MART, but the address is going to be my personal house address. And then, so a lot of the stories that I do are, people figure out how to hack the system. And it's usually not nefarious to start. It's that somebody has a problem, some type of an addiction, and they need cash. And they're like, oh, hey, I just realized that nobody reconciles the operating account. Nobody reconciles the trust account, or I can just forge this signature on a check. And I'm liking controls. Like there needs to be some controls, which is why I like the Bill.com, the Melio, those type of services, because you can have things, queued up with no payments being released, and there's eyes on it, and you can set up controls where payments under, a certain amount could be approved by this person, but anything over, $1,000 has to have a specific person. And so that kind of controls where money's going. And you can look at the receipt or the invoice to say, is that a legit, invoice? So yeah, definitely controls need to be in place, which is another thing I think firms, law firms will struggle with as they grow, because you start off, it's you and you're doing everything, and then you delegate. And you're like, oh, this is great. I have somebody to hand off everything to. And then you hand off everything and you're like, you just gave them the keys of the kingdom, man.
Yeah. I think it's worse than that. We had a PI firm 2 years ago that just started with us. And right before they started with us, they had sent the client an email saying, hey, we got a settlement. We need wiring instructions. Well, the boogeyman intercepted that email, responded with different wiring instructions. Nobody picked up the phone to call the client and confirm that. We wired the $28,000 out, and then the client's like, "Hey, where's my money?" And guess what?
And you're like,
We had to give them their money.
oh
But
my
the bad
God.
man, the boogeyman, had the
Um,
$28,000 too.
and they're gone. I mean, yeah. And I've heard, like, luckily I haven't experienced that firsthand. But I have heard, I've talked to people who have had that and have said, hey, guess what just happened? Like,
Well,
oh,
these guys should have been aware because they had positive pay.
oh yeah,
So on checks, they would have to key it
yeah.
in and approve. But this was a wire that, just nobody checked to make sure it was a good wiring instructions.
Right. Because even if they set up from the banking side that the bank had to call them to approve the outgoing payment, they still would have been like, oh, yeah.
Yeah, yeah,
Would have
that's
been like,
good.
oh, yeah, I'm paying. Yeah, I'm paying so and so. That sounds good. Yep. And don't think about the numbers, like validating all the specific, the routing and account numbers. And oh, that just makes me sick. And I hate that there's just bad people in the world but I mean, that's just the environment we're in today. So it's just putting controls into place. And so it's teaching firms, teaching the law firms, like making sure you've got some controls in place. Multiple people are being able to look at things so that you don't have one person that can do everything from start to finish. That's my
Well,
big thing.
therein lies the other reason that smaller firms need someone like you and us, because you have to have a separation of duties. And when it's lawyers and the office manager, who's also the bookkeeper, but they might have given her signing responsibility, but clearly she's writing the checks, paying the bills,
Yeah.
and reconciling the account. Maybe the attorneys are signing the bills and reviewing them, we think, but
Right.
the bank statement should be going to their house. I guarantee you they're not looking at them because they're not. But if an outside person has some oversight and is doing the reconciliations and doing the accounting, then you've separated those duties and the ability for any fraud to happen, even if it's not meant to be fraud at the beginning. But you're right, the office manager has a cash crunch at home, a medical situation. They take, $1,000 or something
I'm just
small,
going to borrow it.
and nobody ever notices that it morphs into bigger things down the road.
Yeah. Well, I will tell you from personal experience. So, being a CPA, you always get the little nonprofits, nearby that are like, oh, can you help me out? Be the treasurer. And I'm like, no.
It's
And I
really not
lasted
much
a long time.
communication. Yeah.
I lasted a long time. And last year, so I'm heavily involved with the PTA at school. And I had done other positions. I'd been, PTA president, secretary. I've done other things. Last year, got sucked into being treasurer for the high school PTA. And oh my God, I was going to lose my mind because literally every check had to have two signatures. They went overboard with the controls because they had somebody that was stealing money years ago that was, went and like all of a sudden comes in with like its Coach purse. And they were like, where did you get money to buy $1,000 purse? Oh, it was a gift. And then they started going through the records, realizing that, she had been stealing money from the PTA. And so it was crazy. But then they went so far overboard that, I mean, it was seriously, every check, didn't matter the amount, had to have two signatures. And the checks had to be, and they had to be handwritten checks. I couldn't do online bill pay because you had to have two signatures. Yeah, like it was just way overkill. So you can't go that far, but like somewhere you need to be in between. But that's what we're like, that's what we're here for, is to kind of help you, guide you with, is this too much or not enough? How do we right size this? And, there's, answers that are probably good for most firms, but depending on your firm structure and how you operate, you're going to want things a little tailored to your specific situation. And so that's where the expertise of, us coming in, having worked with other firms in other situations, we can help guide you through those things. So,
Well, and the other thing that your firm and my firm are trying to do is trying to change how people think about accounting.
yeah.
The firm that goes to their tax preparer once a year to get their taxes done is basically hiring a historian. They're looking backward and
Absolutely.
saying what happened. When
Yep.
in reality, there's no ongoing relationship throughout the year. So we want you to see the value in a monthly, weekly, whatever the cadence is, relationship
Yep.
throughout the year so that we can plan and more importantly, forecast to say, okay, where do we want to go? How do we
Yeah.
get there? And then if we're looking at it on a regular basis, are we off track? I mean, I liken this to your grandpa taking the kids on vacation the night before he loaded everybody in the station wagon. He's looking at a 10-year-old Atlas. He's making notes and off he goes. And he hits
Right.
Atlanta and there's construction. And now he's sitting in traffic for 3 hours because the road's closed. When today we have the Waze app and GPS that, will say, hey, there's construction 2 miles ahead. Here's an alternative that will still get you to your destination. That's what a
Yeah.
dynamic forecast does. And so we don't want to
Absolutely.
look historically. We want to be current and look forward and
Yeah.
help you grow and get to your goals.
No, I'm all on board. I usually say you throw the kids in the back seat and you want to go to Disney World, you type in the address, and then you get in the car and like you just can't go on autopilot. GPS is going to be like
Yep.
detour, or the kids interrupt you. I need a potty break. Like there's going to be just like nothing's ever, you get in the car and you get there. Like it's not A to B single, one straight line, right? There's always some type of a detour or, pivot, something comes up. And yeah, so I mean, I try to do the same conversation with people. There's the tax preparer is looking backwards. For reporting, it's all compliance. It's reporting what already happened to calculate how much tax you owe the government. Your bookkeeper, financial historian, every transaction that happened in your firm, where did the money go? Where did it come from? Where did it go? It's all history. It's all what already happened. I want you to start thinking about the future. What could possibly happen? Where do you want the firm to go? Do you want to retire someday? When you retire from the firm, what does that look like? Is it, are you going to just close up shop? Are you going to try to sell the firm? Do you want to bring a partner and then the partner buys you out? Like what does that look like? And you get some people who are like, I'm only 35. I don't know. I'm like, whoa, you gotta,
Got to plan around it when you start the business. Yeah.
but you do have to think about those. It has to be on the horizon because, I mean, you and I both know. I mean, I've seen firms towards the end that try to sell and, they have all these personal transactions that muck up the financials. Well, the new person's not paying your country club dues. So that kind of, you have to have some type of analysis to pull out what was personal and very unique to the current owner that the new owner's not going to pay for. And like, what would it look like for them? So it does matter. Like it matters to have clean books and good records to not only make current decisions now, but how are you going to get to where you want to go? So
Well, if you
absolutely.
have those clean books and records, you're going to get a premium for what you're trying to transition. I
Yeah.
mean, clearly, law firm transitions, if they happen internally, there's an inherent discount, right? You're going to sell to your younger partners, they're going to
Yeah.
buy you out over time. But if you're selling to an outside partner, another firm, or we're going to get to the point where you can have non attorney owners. I don't know if that's good or bad, but it happens in
I
some
don't think
states.
it's good in
Well,
Arizona.
yeah, we could talk a whole long time about private equity coming into professional service firms.
Right.
But if
Yeah.
you're looking at an outside partner, to come in and buy you, the better your books and records are, the more confidence they have in being able to pay what you want.
Right. Absolutely. Yeah, and it's hard. It's hard when the people when you're talking to somebody who's not thinking through the end, it's hard to convince them to spend the money now to get the good bookkeeping, and it's worth it to
Right.
have the good numbers to not only make good decisions, but in the end you're going to get a better premium when you sell. So yeah, it's I mean, there's a lot. Like I just feel like there's so much that we can do. I feel bad because there's so many things I just don't have time in the day to help clients through, but it's not their priority. It's like me pulling them like it's gonna do this. So, and I feel bad sometimes, but I don't know. It's hard. It's sometimes hard to be in our position, right? I mean, it's that crash that you don't want to look at, but you have to. And like sometimes, and you're like, I could have helped you.
Well, and all we can do is say, hey, here's an option. It's their decision.
Yeah. Exactly. And that's what I try to tell. So I usually start my conversations with, I can't tell you the decision. I can't tell you the answer, but here I'm going to give you two or three choices. You pick A, B, or C. So just to kind of help you. And here's the pros and cons of, each thing. So, I mean, I enjoy working with my clients, the conversations we have. I mean, the possibilities, what people want, their goals. I mean, it's kind of amazing. And I've seen some really amazing things. So I love being in the legal industry. It's been an adventure for sure. So
It's great when the light bulb switches on, right?
yes.
So we
Yep.
had a firm that they came in and they had a big cash crunch at year end. And when we diagnosed the issue, it was because one of their partners hadn't billed all year.
Uh,
All year.
yeah.
And so
Yeah.
we instituted some billing hygiene. He got his bills out. Now it's really difficult to bill a client 9 months later for something, right? The pain
Absolutely.
point's not there anymore.
Hey, fun.
So we did get his bills out and it took a while. And now he's billing on a regular cadence. So the cash position is improving. And he was our biggest offender. And now he's our biggest cheerleader about billing. He's on his other partners about having good billing hygiene. And so we're
Yeah.
really in a good cash position because the biggest offender is now the
Yeah.
police chief.
Oh, absolutely. And oh God, I've seen that too, where you're like begging people, please just bill that, which is why I like a metric of total lockup because for those who bill hourly, because I'm trying to press upon them, you do the work, get the bill out as fast as possible. And I know in the legal industry, they try with the hourly billers are trying to bill once a month. I've even recommended some bill every week because and you get the pushback like, well, it takes me 2 days to bill monthly. I don't have 2 days a week. I'm like, well, it won't take you 2 days because it'll take you 4 hours because you didn't work on every client that last week, right? So yeah, it's just crazy. But I'm all about the possibilities. It's getting people thinking you don't have to do the same thing. You can do it different and you're gonna
Right.
get different results. And hopefully the different results are better. Um so I've had a great conversation and I think we could probably go on for hours talking war stories. So people are listening and they have questions. They want to reach out to you. How do they get like what's the best way for somebody to get in touch with you?
Reach out to me at the firm, Anders Virtual CFO Services or anderscpa.com. I'm on LinkedIn quite a bit, John C. Scott CPA. I also have a YouTube channel for our podcast, Judicial Dollars and Cents. I've written a book and I have an Instagram and a TikTok where I put clips of those. Oh,
What's
I don't do a TikTok thing.
okay.
I'm not doing any of the trends, but that's where the clips.
Right. Yeah. So I tried TikTok and I just couldn't do it anymore. I'm like, nope, I'm out. I can't. I just can't. But we will put links in the show notes so that people don't have to search. We'll do that and we'll put them in the show notes so that you can just look into the notes and you'll be able to see how to get in touch with you. So I have such a great time today, John. I like
It was a
seriously.
lot of fun. I
I hope
really
this was
appreciate it.
fun. Good. Good. Absolutely. Well, thank you very much and have a great afternoon.
Thank you. Bye bye.
If you are listening to this podcast episode and you're thinking, I know I need to understand my numbers in my law firm better, but I'm just not ready for CFO support. That's exactly why I created a program called Profit Strong 90. Now, Profit Strong 90 is a structured 90-day course designed specifically for law firm owners who want financial clarity without the overwhelm. So inside this course, you're going to learn how to understand your profit and loss without feeling intimidated, identify where profit is leaking from your firm, improve cash flow predictability, build financial habits that support long-term growth, and make better decisions using real data instead of gut instincts. Now, this isn't theory. It is practical step-by-step guidance built around how law firms actually operate. If you want to feel more confident looking at your numbers, if you want to stop guessing, and if you want to build a stronger financial foundation for your law firm, I can't make this any better of an offer. It's free. Click the link in the show notes below to join Profit Strong 90. This is where clarity starts for you.